Premium Media's Mining Weekly is speaking to Kobus Loots, the CEO of Pan African Resources. Now, Pan African is going through a sweet spot here at an odd time. We saw you report higher gold production, lower debt, good safety, environmental progress, project advances, and intensified dividend intent. Kobus, is this sustainable, and how are you managing all this?
Well, we like to think it's sustainable. You know, we've done some hard yards in the last years to reposition our business, so to reduce our all-in sustaining costs, to focus on our surface tailings retreatment business. That's going very well. And then also to do additional exploration and development at our underground assets, specifically at Barberton. So, you know, all of these things are coming together quite nicely at the moment. And we're seeing it reflected in our results.
I see that at New Consort, talking about your projects, I looked at a headline yesterday and they said, wow, this is a very high-grade route that you've got there at New Consort, that they could even see the gold with their eyes. And I was wondering, can you tell us about this rich vein at New Consort? Is it greater than you expected?
Well, Martin, it's fairly small, but certainly in our view, it'll turn around the fortunes of the Consort mine, which has been struggling for some years to make profits. So it's not a massive find, but certainly it'll assist Consort, and it delivers into what we said we would do to the market with the interim results of last year, where we said, you know, we were busy with a number of initiatives to increase production from Consort and make sure that it contributes to group profits going forward. So I think from that perspective, it's very good. And then, you know, we also have a number of additional exploration targets at Consort. So many years ago, Consort actually was the richest mine at Barberton, and with these certainly with what we're doing at the moment, plus the exploration targets, I think that'll stand Consort in good stead for the years ahead.
And you've also got other projects. You're lucky that you've got organic projects and you don't have to engage in any M&A. You seem to always be able to roll out a new project, or you're able to put an extra ounce in for everyone you're taking out.
Well, I think if you, Martin, if you look at what we've done in terms of our reserves in the years that's passed, we've managed to maintain our reserve base. And as you say, you know, we find that if one can make internal projects work, it makes a lot of sense, because clearly you don't have to pay for them. And Elikhulu is a case in point. You know, Elikhulu was a 1.8 billion rand project that we launched, and initially we forecast a payback of 4 years at this gold price, and given the performance of the asset, the payback will be less than 3 years. So that's fantastic. And then, as you mentioned, new projects. We're very excited about the Egoli project we have at Evander. It's an underground project, but we don't have to go and do any shaft work. So we have a twin vertical shaft system that extends all the way down to 1.6 kilometers. We have a fully operational plant at Kinross, which is a big positive. We have all of the other infrastructure in place. So yeah, we as I said, we're quite excited. We now in the process of, number one, finalizing the funding, and working out a detailed project plan with DRA, our consultants on the project. So hopefully, when we put out our final results in September, we can also then update the market in terms of our development plans for Egoli.
And talking about the market, I noticed you were top of the pops the other day in the lead share rises on the JSE. So the market seems to be recognizing that you guys are in a sweet spot.
Well, yes. I mean, you know, we know that gold's a cyclical commodity, and not unfair to say that currently we're in a really good brand gold price environment. So we not only have the dollar gold price working for us, we have also a fairly weak rand, even though it's strengthened recently, but it still means a gold price of just south of R1 million a kilo, which is very attractive.
You went onto the New York Stock Exchange, the ADR. How's this going to help you?
Martin, the US market is, in terms of liquidity and in terms of the investor base, is, as you know, is massive. We've done very well in both the UK and South Africa in terms of our shareholder base. But the depth of the market in the US, I think, is one specifically in this gold price environment that we should look to access, given the quality of our assets, the fact we're long life, we're a safe producer. So we tick all those boxes, and we'll see how it goes.
ESG is big these days, those three letters. And I think if you're in gold, you also seem to have a heart of gold. And how have you done with the S? And during COVID, particularly?
Yeah, it's ongoing, Martin. So, those people that say that, mining companies only take, I think, are very ill-informed. And if you look at our initiatives over certainly the last 3-4 months since we've had the start of the pandemic, we've gone to great lengths to look after our own people, our own employees, and also the communities that surround our operations. So those efforts will continue, and we recognize that certainly in the Barberton area and also in Evander, where we operate, we're the largest employer in those areas and the largest economic activities, so to speak. So we need to make a difference, which we are doing, and making a positive difference, and we'll continue to do so.
And in that third letter, the E of the ESG, you seem to be also performing the solar plant. Oh, it sounds good, that you got at Ilikulu.
Yes, Martin, I think given the improvements in technology in recent years, this sort of project makes all the sense in the world. We have the support of government, so the minister has come out the Minister of Mineral Resources has come out quite strongly to say that to the extent that we experience bottlenecks, we need to let his department know. So we have support of government. From an economic perspective, it makes sense. As I said, the solar plant will supply 30% of Elikulu's power. It's a fairly limited capital item, so it's about $7-8 million. We estimate the payback on that investment to be, again, sub 4 years, so quite attractive. And that'll be the precursor for us to look at further similar initiatives in the group. So we would hope to expand the plant at Evander for a portion of Egoli, number one. And we've also commenced a feasibility study at Barberton for a similar plant at Fairview.
That is fantastic. So you could earmark these solar plants for different smaller projects as well. I mean, so you don't have to have a massive, big megawattage. You're going for 10 megawattages, but you could have certainly those spread around at that sort of level.
Yes, and so initially we don't have a storage solution as part of the project, but we're certainly leaving the flexibility so that we can install storage going forward, which means that you could potentially actually increase the percentage of power that we get from these projects in the years to come.
And you're also expressing some good dividend intent. What is your dividend outlook? How are you thinking about dividends at the moment?
Well, Martin, it's always a sort of balance between de-gearing, which we're doing very nicely. If you look at our operational update that we put out earlier this month, reinvesting into our assets, which we've always done, to ensure that they're sustainable over their long lives, and then returning capital and cash to shareholders. So in the past, Pan African has been a leading dividend payer in terms of our yield in the global gold space, and we'd like to get back there in the years to come.
And safety, you've also been doing pretty well on the safety front. How's that going to be sustainable, do you think?
Well, the key for us is to have people take our people take responsibility of their own safety. And we've launched a number of initiatives and they've been greatly successful. It also assists that we now sourcing 50% of our gold from surface, and inherently those are just safer operations. To give you an example, Elikulu's gone for 11 months now without having one lost time injury. So that's fantastic. And that's where we'd like to get our underground mine to also over time. So the focus is on safety. It's been a key area for us for many years, and it's gratifying to see that we're achieving results. But as we said in our operational update, safety's never done until we have absolutely no incidents and issues at our operation. So it's a journey, and we'll continue on this journey.
And on the debt front, you also seem to be lowering your debt, which is always good.
It is. It makes one sleep a little bit easier at night. And as we've said again in our announcement, if at the prevailing gold prices, assuming no major interruptions from COVID, and assuming that we can achieve our guidance for the year ahead, which is 190,000 ounces, we should have pretty much no debt on the balance sheet in 12 months from now.
And what do you think on those ounces? What do you think your all-in costs are going to be?
Well, I mean, all-in sustaining cost is probably a bit easier, and we're still targeting a level of sub $1,000 an ounce.
That sounds excellent.
We're very proud of our people and what they've achieved. These are exceptionally difficult circumstances and times, and they're unlikely to get easier soon. So yeah, we have to deal with it in a responsible manner, and that's what we will continue to do.
That was Kobus Lutz, the CEO of Pan African Resources, talking to Creamer Media's Mining Weekly.